do it. Okay, 5, 4, 3, 2, 1.
Wait, what's this
5,
called? Big
4,
announcement coming soon?
3,
Yeah.
2,
5, 4,
1.
3, 2, 1.
Welcome to the Big Announcement Coming Soon podcast. I'm Michael Bull, hanging out with the full crowd again today. David Collette, Nick Garvin, and Jeff Renson. We got an exciting plate, as we always do. We're going to start off talking about NFTs, something about Blur that I have no idea what he's talking about. Balaji pays out a crazy $1 million in bet early because he was wrong. So what a shock. The Biden administration is pushing to tax all those miners out there because they're ruining our ecosystems. We might as well tax them for it. And David, in his continued excitement about correlation, found some articles from Motley Fool, of all places, to support his thesis, because really it's all about supporting our own biases. That's the whole point of our So we'll start off with Nick. What is going on in NFT world, and why should we be excited about Blur?
Well, by now you're probably familiar with at least the name Blur. They've been quite a disruptor in the NFT space for months. They were teasing an announcement that many thought might have been another airdrop package. About a month or so back, some people got up to like 30,000 if you're not American and you claimed. This is all through the farming and some of their mechanisms that pull people away from OpenSea.
Mm-hmm.
They doubled down yesterday, or maybe a little bit over a day ago now, with what they call Blend, which is Blur lending. Now, you don't have to know much about Blur NFTs to know about lending. We've all had our fair share of stories with it, but now it just is another level. And I don't know if this is really the best thing for the space to have degens, who can't afford a monkey picture, only put up 8 ETH maybe, and then get a 40 ETH, loan, or enough to get an ETH, or get an ape or get a punk or something. And I don't know, it's a slippery slope, but I'm curious what you guys think. I have a thread here that will link below. But the very first post from the thread says, if you have a punk, you can now borrow up to 42 ETH within seconds. If you want an Azuki, you can now buy one with just 2 ETH up front.
Now, why would anybody take that risk on those borrowers? Because how do I collect on that money if they default? I can't even ruin their credit, can I?
I'm sure the smart contract is holding the punk. So when they buy the punk for 8 ETH, it's held in a contract where once the full, let's say 55 ETH, I guess more from around 75, is paid off, it gets transferred and is like back to that old initial, from the beginning, smart contracts were kind of like to execute automatically. So if it's paid off, it gets fully transferred. If not, I'm sure the contract returns it to owner or the original owner and the ETH.
So they're not really losing any money. They're just a way to speculate and get the prices to fly up.
Yeah, definitely the price, that part, as well as like I don't know, it's exactly as Nick said. Like if you like really want to be cool and like buy a punk or whatever, but you can't afford it, and you start putting money down on an escrowed punk, you might benefit from that by the punk price going up, but you also might not, because the punk price might go down. Then you're paying for a $55 whatever ETH punk, and it's worth like 30, and you can either dump your partial ownership and just lose it all or not. So it's pretty it's like taking like the most kind of like immature in terms of like knowledge of money space and applying like very complex monetary situations to it.
Absolutely. Yeah.
Well,
no, spot on.
Well, we should let Nick in on it. Yeah, tell us about this. Like, this seems crazy.
No, like, David, spot on. Like, it's risk upon risk, right? And a lot of it is so like, they say like, oh, you don't have to sell your punk. If you need liquidity, we have liquidity, right? What I find most interesting that no one's talking about is that Blur's also the one that's like responsible and like undoubtedly the catalyst for the bleeding out of the NFT market, because of the Blur bids and because of the farming. And it's wrecked a lot of blue chip PFP, OG or one, the first couple year projects that were, pretty stable up until Blur's debut.
We should probably explain what Blur does, why it's different than OpenSea, why it causes this problem.
So you can, what they're doing is farming the airdrop. And like Nick said, this was the new announcement that it was not another airdrop season, but actually this blend product. But what people have been doing is if you list and sell anything, you get more of the Blur airdrop. If you buy anything, you get more of the Blur airdrop. So that people are trading back and forth at descending prices in order to later recoup the profits from that Blur airdrop.
They're gaming it, yeah, and it's
So
wrecking a
it
lot of projects along the way.
so it changes a project from being kind of like an appreciation of the art and the community into being like how much is this project actually worth? Let's see, and like it's battling
Not
people who are
even that.
really
How
trying to
much
do
is
it for money
Blur going to
versus
pay me
artists.
for trading this project?
Yeah, there you go, exactly. And so
And it
like
wasn't the
it's just like
communities
a
that
fast test of yeah, exactly. It's a fast test of NFTs,
yeah.
exactly like you're saying, and not for what the community necessarily wanted them to be. Like
Yeah.
fast, it's like flashbots or something like that come along,
Oh
right?
yeah,
And
basically, in
MEV.
many ways. Yeah.
Well, and we can look back at what this has done because we talked about the prices going up because more people can buy it. What I think it's going to do is push it down because there's also you can borrow or you can deposit your NFT and borrow against it if you have the liquidity to buy back. If you don't, they get sold. And we've seen because Franklin is the one who's famous for this of loading up apes and taking loans on those NFTs. And then just recently, through some other issues with his finances, having to exit everything and sell
Yeah.
everything. So, like you said, it's not a community art project vibe utility. It's simply trading back and forth things for monetary benefit, and that's not why they started these communities.
Yeah, the
And
whole
it's a
buy
lot
now, pay later is just a bit too much. And I just
yeah,
think
I
that
mean,
this,
in the very bottom level of it, you're taking your NFT and you're able to now take a loan out against it, and there's some complex math there.
Mhm.
It's
Wait,
always
so
going
can
to
I
be really
can I get
dangerous.
cash or not?
Yeah,
You
you
can
can
get
take it to
you
ETH
can
and
get
get cash
So I can buy this stupid NFT, this like postage
for
stamp thing that
the
somebody made in
equivalent
10
of 40,000
seconds.
and take a $20,000 loan to get cash. So you're still losing.
yeah, you're
But so
gonna
wait,
so
yeah, but so
if
I
you
take
got
that
lucky
I
and
take a
bought
loan,
an
but never
NFT.
pay it back. There's no down. I mean, if I get the cash and don't pay it back, there's no downside for me,
Well,
right?
so you're assuming that you bought the NFT, it went up in value, and then you took the loan out. If you go and buy an NFT, you can then get a loan for it, but you'll get 60% of your money and you'll eat the 40 because you'll have
Okay,
bought that NFT, right? So like it's only
okay,
if you've like really,
got it.
so this is the problem, right? So a lot of people who have like made a lot of money in NFTs early on have these really expensive cyberpunks and apes and whatever, and they can just like put them into the thing. And a lot of people essentially feels like they can own that thing, but actually they can. It's just a way of actually without, well, I mean, without crashing the market, it still crashes the market. Get out of some of your positions because you can't
mm,
if you're there are a lot of
Mhm.
people of these NFT projects who own like hundreds of the thing, right? So if one of these large seller like people start to sell, it's pretty destructive for the community. Whereas if
mm.
you're like loaning it, yeah, I don't know, it's a little more abstract.
It's another great point. OSF did a whole post about that in his newsletter about how him and Mando, the two creators of Wreck Guy, the PFP community that's quite popular, right, with the bottle, about how they had to offload loads of apes. I don't know if it was like 100 but it was like a significant amount between the two of them. And they said, right, because Blur has provided like a gold mine of liquidity right now. It's a very new age, but it's completely changing the game. And I don't know, for good, bad, or ugly, remains to be seen. But very interesting shakeup from Blur.
Okay, well, maybe we should move on from that one. So this Balaji guy pays out his $1 million Bitcoin bet. So he was betting that Bitcoin would go to 1 million because of hyperinflation. So the end of the world will come, but hey, Bitcoin will be at 1 million because when the end of the world is coming, we're all going to throw our money apparently in Bitcoin, which is of course insane. And so no surprise he lost that bet.
So he's paid it out 45 days early, which I don't think he's
What a
going to
guy.
win, but I'm surprised he
You don't
ended it
think
early.
Bitcoin will be 1 million in the next 45 days?
I don't.
It hasn't even hit 32.
I mean, it's down. But I think, and he said he brought this up for expensive publicity and to talk about a few things. And I don't think this was the smartest way to go about it. He already had a great, big, vast audience who was listening to him. He didn't need to do this marketing.
Right.
And I don't think it got much attention outside of people who are already listening to him. But
No, I mean, I only saw it because you put it on.
Oh, I
Well, it made
know.
Cointelegraph.com. I mean,
Definitely. No, a lot of people like this has become a meme, Bitcoin to a million.
Yeah.
but beyond
I
crypto
think
Twitter, like in a normie meme,
no, it's not.
oh
anymore.
no.
that's what I'm saying.
That's the person
It
who
didn't
represents the
grow
normies.
Balaji's audience. Anyone who
No.
knows the meme already knew him.
But it's
But
such
it
a
did have
weird-
it did have the effect of what he was hoping to do. It had everyone start to speculate on the value of money. And like that was the kind of point. And I think yeah, I agree. I don't think it really worked the way he was
Yeah,
hoping.
I would say, but we're in
But
Bitcoin. We already speculated about the value of money.
I'd say we put money together so people will speculate on the value, or we'll learn about the value of peanut butter. So let's all put together, let's say 500 thou, and make some crazy bet that peanut butter will take over the nation, and if it doesn't, we pay 500K, and that way, more people know about peanut butter.
Yeah, sure.
It's about as logical.
And then,
Are you a peanut butter lobbyist? What?
I'm becoming
What's
one.
the show? The turn the show's taking. But wait,
well, the question is, does he have peanut butter manufacturing in the basement? Because that's essentially what the analogy would be. Balaji does benefit from publicity. I'm not saying that's not why he did it, but this is a way out. I mean, this is the best way out of the bet, I think. Is like if the bet, if it got to the end of the bet and it was at like 45K, which it'll be something like that, and then he looks dumb. Whereas now it's like, fuck it. I only did it for this. I'm willing to pay the money ahead of time,
right.
and
he's trying to,
he's going to lose anyway, so he's maximizing his gain and his loss.
Here's what's happened though within maybe the 2 weeks before the bet and the last 45 days. So BRICS, right? Brazil, Russia, India, China, South Africa are talking about trading in different currencies, mainly the yuan, and now it's BRICS, and they've added Iran and Saudi to it. The Saudi one's interesting because oil. Right, OPEC and prices everything in oil. I know the U.S. is the biggest producer of oil, but worldwide it doesn't compete with OPEC and Venezuela. So if they're going to start trading in yuan, France and China are trading in yuan, oil and Saudi might start working in different currencies.
When do you think that's going to happen? There's no indication or evidence that's happening.
Yeah, they're buying oil. They're selling oil in non-U.S. currency right now.
It's already happened.
This is over the last 2 weeks. These changes have been happening really fast. And then the U.S. debt ceiling talks in June. I know they always raise it. U.S. hasn't defaulted, but they're talking about the default enough to worry some markets because we know markets are driven by sentiment. So I've never seen more movement of the world moving off the dollar and the power of the dollar and the potential for the dollar to devalue itself, regardless of Bitcoin appreciating against Bitcoin to 1 million. So Balaji's on the right path. He's just got a short time frame because there's been a whole lot of negative stuff in the last 45, 75 days for the US dollar.
And I think that's his angle, right? That was, to me, that's what I thought the attempt was, because he's smart enough to know that we don't need publicity from another promising number go up meme, right? To me, it was like the bank started going down, and this was a way to kind of get crypto Twitter and almost meme and create like a destination, which was like banks are going down, we're moving away from the dollar. This escalation would ensue with the help of crypto Twitter memifying it, right? Didn't think it was like one of those things that we're all going to get there, like a plan B, stock to flow thing, but more or less like taking something that was a cult of people and then educating them or bridging them, and the same on the other side, bridging the other side to crypto when they see their banks go on a bank run or when they see their country move off of the currency.
Oh yeah, good point. I didn't mention FRC also collapsed in my list of things going wrong.
Yeah, well, I mean, it's interesting. Like I was watching something recently where, I think it's so if you think about the U.S. dollar collapsing, I mean, we've all lived in developing countries. Essentially, we're kind of to take the devil advocate position. You're arguing that those kind of currencies are going to be better than the U.S. dollar, and they're super not, right?
No, I mean, they're going to collapse
even if this is
with
happening,
yeah,
even if this is happening, it's happening very slowly. It'll take our entire lives for the U.S. dollar but more importantly, I think it's just the discussion. The fact that people are talking about it is kind of it provides room for innovation in certain areas and buying pressure for
it's healthy too. I mean, the U.S. is able to dominate foreign policy economically because of the dollar, and it's healthy for it to feel threatened a little bit. So maybe they'll help get its shit together.
Yeah, for sure. But I think the other part is that I was watching I don't know one of these old wise guys on Mac Blockworks. Howell, his name was. Really like that's the guy. Essentially, he's talking about liquidity cycles, and it's really interesting. The biggest problem right now is a little bit off topic, but I'll finish very quickly, is that if you raise interest rates up to 5%, which we've done, you have huge interest to pay on that. And so you can't keep them there for very long because it's just way too much. Where are you going to get that money? You have three options. You can either raise taxes, not going to happen. Cut spending, also not going to happen, or you can print money. And so eventually they're going to print money again. And the reason this has occurred is because they printed money before. And so liquidity has become basically a self-fulfilling dream, where essentially you must because 5-year rollovers occur. And so everything needs to roll over, and then money needs to be there to roll it over. We basically said that we're in debt for a certain amount, and that debt is larger than the amount of money, and so you have to have the money to cover it. This is the debt ceiling argument as well. So new printing of money will come. It's coming. It's just going to depend on what happens between now and then that causes it to happen. And so this is kind of the argument about the banks failing. And this will get to my kind of discussion later on, which is quite funny because there's a little bit of a meme occurring. There's a little bit of a weird narrative where it's like bank fails, Bitcoin goes up. It's happened the last 3 times, which is
Right.
I mean, it's pretty fascinating to watch, actually. Like, I still didn't think that kind of narrative would come at this time, and I've been here for 6, 7 years. So, yeah,
The space is still
Yeah,
so
fair enough. You
foreign
might
to
be right
most
on that one.
people. Most people have no idea what's going on with
Jeff
anything
and I
in
made
crypto,
it.
I think, still.
Jeff and I made an NFT about the bank run blow up like kind of thing with
Yeah.
Bitcoin raining down. So yeah, we're timestamping it. We're
I
here.
can't wait to take an $80,000 loan against it.
Yeah, let's go.
against Bitcoin, yeah, for sure.
You can
Sure.
buy it for about $12 right now if you'd
So
like.
I'll
I'll show
sell
you.
it-
I'll walk you through buying our token.
Yeah, I'll sell it to Jeff. Jeff will loan it to you, and then yeah,
Hmm.
we'll figure it out.
All right, moving on to the evil of crypto. White House pushes for punitive tax on crypto mining. The Biden administration is campaigning for a tax first sought in a recent federal budget proposal advocating that crypto miners pay an amount equal to 30% of their energy costs. Bitcoin is kind of just a silly thing anyway, so why are we allowing people, or shouldn't we be punishing people who are mining it? Now, of course, it's just going to move. If it becomes too expensive here, it'll just move somewhere else. So I don't know how much
Yeah,
it
it's
effectively
mined.
works overall.
If
But
they're going to move the machines, it's mined with more green energy in the U.S. than it is
Potentially,
in
yeah.
other places. So it's if the Bitcoin mining is going to happen, it's better that it happens in places like the U.S.
Yeah, I guess. I mean, it all depends on
Mhm.
where you're doing the mining. I mean, it costs more to do it if you have to burn oil to do it or burn coal to do it versus hydroelectric or
Which
something
we're
like that.
talking about tax. Don't we subsidize coal and oil in this country?
Oh, yeah, of course.
So we give those companies billions, but we're talking about taxing crypto, which is using like the flare off gas and hydropower to mine.
Well, the problem, I think, and I'm totally guessing and
I didn't say it
making
was
it up
logical.
now, is that it's the national grid problem. Like you're not actually, you think like, oh, there's a little Bitcoin mine next to this, water plant, and oh, it didn't use all the hydro, so I'm going to use it. But it's all webbed out into a massive grid, so you're
can
not
only go
actually
so
taking from
far.
one to the other.
Yeah, I'm not sure how
Well,
much that is. Like, if you
that's-
look at Texas, they were off the grid.
Well, that's
Check
the
out,
one.
but like
example I was
the
gonna
New York
give.
power
Texas
plants can't send to Oregon. Power plants can only send a certain distance anyway without they lose too much
but
power
they'll
over
pick up.
time.
They'll
Anyway.
pick up from each other. So there's like a damp here, and so this one will pick up because this
But there's
one needs
going to be a
used,
big
and
cost
so
and
it goes around.
speculation in between.
Yeah, but like they're
right?
not sending power
Texas-
lines across Montana.
No, Texas is a great example though, because it is a power grid separated from the rest of the grid. So this might actually be, and this is probably why Texas won't pass it, because they want that kind of investment in their. There are different reasons why they want it. Maybe they don't care about the environment, or they can see uses for gas flaring where they could turn it into money. And I guess that's the question, Len. If you can isolate what energy you're using, and it's clean energy or making energy cleaner, should you pay that tax? And if you shouldn't, then that's great. And then I'd probably be for it, to be honest. But if it's just tax on Bitcoin mining across the board, then you're hurting innovation that could possibly help the environment in the future if it's used for specific examples like flaring and things like this.
Yeah, I
Wasted
think this is
hydro.
more of a political argument, of course, than anything else.
Yeah.
Yeah,
Which,
What isn't these days, guys? What isn't?
that's right.
everything is politics. Yeah, I think he's talking about this. It'll never make a bill. It'll never get through a vote unless, like all the other things politicians say, 4% happen, 1% happens.
Well, I mean, there are states that are going to stand up and specifically be like, oh, they're not going to pass this. I'm going to pass the anti-bill, even though the original bill didn't, which is kind of what you see with like Florida and Puerto Rico and stuff. They're all like kind of like tax havens, and have nice things for crypto to come. Like, Mayor of Miami was a huge fan, and there's Miami coin for a while. Did not do well, but all that stuff.
Miami coin
They host-
decorrelated down.
Bitcoin conference.
It did not correlate to the S&P. In fact, it was very decorrelated.
So you're talking
Okay,
about
well,
the
we might as
tax
well get-
havens. Yeah, let's go to that topic.
Well, yeah, let's get into the decorrelation. So we're done ruining the environment. Is Bitcoin correlated to the S&P 500? So I wanted to say yes because I'm just looking at it visually. You're saying I'm wrong thanks to heuristics, and you have math to prove that I'm wrong. And am I wrong, or maybe we're wrong? I don't know. It just in the recent times you're saying it's decorrelated, or are you saying it has been?
No, so yeah, the article goes into it 2000 and I think it was 11, 20 up to 2021. And so it just looks historically across Bitcoin over time. And so I
last
think like
10 years-ish.
yeah, exactly. And so the problem is you got to break down what correlation is, what creates correlation, and then if it can lead to causation. And so like there are different types of correlation, right? So something can go up, 100% while the other thing goes up 1,000%. They're both going up, so they're correlated. Yes, one correlated, but they're vastly different pricing, so they're not really correlated. And so there's like a number quotient that goes between those to see what that's called the delta, I think. But anyway, like, so you have to kind of define what correlation is and then test for it mathematically. And the problem is that essentially, like when you look at the chart, it looks like Bitcoin's following, because in a bull market, yeah, everything goes up, generally speaking. So that's not really enough. It's kind of like, the sun goes up when I breathe. It's correlated, but you want to know perhaps a little more. And so, you want to find out when the correlation gets out of hand. But first of all, you want to see if there's correlation at all, if you should be basing anything on this at all. And it turns out there isn't. Essentially, Bitcoin is like 0.2% correlated. And so actually what you should be looking for are things that it's much more correlated to. DXY, the dollar index, is a stronger correlation. I think it gets up higher, like 0.4 or whatever. But I think the best one is this, what I was talking about before, it's liquidity. If you look at global liquidity, it's just a big old fat chart of the world's liquidity. As the liquidity hits the bottom, you see Bitcoin hitting the bottom. As the liquidity starts going back up, there's more money cruising around being used for risky assets. Bitcoin starts
which of course then drives all the stock markets up.
Exactly, yeah.
So they're all correlated to that.
Yeah,
in their own way.
Exactly. Liquidity creates bull markets. Lack of liquidity creates bear markets or recessions. And so across that correlation, then there will be times where it is more or less correlated. But generally speaking, you shouldn't be using the S&P as a correlative kind of guess, because usually you're behind. It tends to be what you find is Bitcoin front runs the S&P or whatever by about 2 weeks. And so if you're like, oh, the S&P is going up, I better buy some Bitcoin, you probably missed it, and it's about to, so that's essentially why you saw, like, during the kind of heat of battle of the bull market, or actually, sorry, the bear market, you would see like Bitcoin go down like a huge, like 10% crash, and then the market would open the next day in America, and it would go down like a whole like 3-4% or whatever. And so it was kind of like you were seeing like money that was distributed across lots of stuff fleeing what it could first as it started to digest what would happen in the week. So you can start to see patterns occur. But yeah, so it's an interesting. And so that's the kind of what leads to the idea of what causes what. So like if you're looking at S&P and you're saying it's correlated, what's causing what? Neither is causing it. So it's not like Bitcoin's causing the S&P or the S&P is causing it. But one is operating first versus last. It's like housing. Like housing is the last thing to kind of go.
And you're saying Bitcoin's the first.
Exactly. Yeah, because it's the most like, oh, I don't need my Bitcoin. I still need my car, house, all that other stuff, right? So like anybody at a very rudimentary level. But if you're an investor, you're like, okay, I got to get my, like, this is the most illiquid stuff I have, and I need liquidity. I better sell it at this price while it's still good. I can sell my T-bills later. They're probably going to be easily sellable. And so you work your way down the liquidity chain as you run out of liquidity.
Okay, but David, I think you're wrong, because when I look at the market right now, S&P is up 0.2 and Bitcoin is up 0.18. There you go. Correlated.
Well, that's exactly right.
In the last 5 minutes, it's been correlated.
Exactly. So it does.
Mike's on the 1 minute chart. I love it.
I'm convinced, David. I'm done with you, Mike. Got it.
Mike's on the 1 minute chart.
This is how you get into leverage trading, right? Because you're like, wait a minute, I see the pattern. 1 minute chart. Let's go for it. Zoom out.
But when you talk about David, when you talk about the liquidity cycles and the patterns of that, I mean, we saw a little bit of glimpses of flashes of COVID and stuff for people, liquidating things that they didn't need right away. But are we talking like 4 years? Does it line up with a 4 year cycle? Does it line up with just like, I mean, I know it's just when people decide to take it off the table, but what's that time horizon look like?
Well, that was what this. Yeah, no, that's what this documentary, it's on Blockworks. It's with Raoul Pal interviewing, I want to say Lee Howell. And he's like been trading since like the 70s or whatever. And essentially the problem with the recent world is that liquidity used to be part of the problem, part of the thing. You're like, okay, there's all this like deposits and all these other things. And I can't go into the exact why of it. You have to watch the show. But essentially, since I guess like we started in 2008, we started this basically massive boost of liquidity that then had to be rolled over, right? And so when you roll over your house into a new loan, you're hoping, oh, I can hopefully get it at a lower price. But right now we're right in the middle of one of those rollover cycles, and everybody who took their loans out at 0% are now having to refinance at 5%, and the money's not there. Nobody wants to lend to them. And so what are they going to do? Default on all the
who took
commercial
out
real
5-year
estate?
loans on their homes? What are you talking about? You
No,
mean
no,
they're like
it's
adjustables?
government.
Okay,
No,
yeah,
it's not people.
Gotcha.
Yeah, yeah.
Yeah,
It's
yeah.
government debt. Yeah. So
Gotcha.
so like when they printed all that money in COVID in 2020 or just before 2019 and stuff, all that printing that was occurring because of the taper tantrum stuff, all that money was on 5 years and it has to be rolled over. And now they need to roll it
I
over
mean, the
and then
debt
they're
on it
about to
needs to be
pay.
paid. Is rolled
Exactly.
over.
Yeah.
So the
And
debt
so where's that
was
money going to come
0.5.
from?
The debt is now at 5%. So they've 10x'd the amount of interest cash they're paying on top of the money they took.
And so it leads you to a really dangerous situation where essentially now it's gotten so big that this is the only thing really driving the markets, and everything else is just, floating along in stagflation, as I guess lump summers would say. And so these big, because basically it's like, oh, it's not doing anything. Inject a bunch of money. Okay, it goes up and then it comes down. Oh, but now this debt is so huge, we have to inject even more money. And then it's gone to the point where just these injections every 5 years are going to have to occur because the debt is so enormous that you can't, those are two other things aren't going to happen. You can't raise taxes on the rich because no one's going to allow that to happen on the Republican side, and you can't cut spending because that's not going to happen on the Democrat side. So the only thing you can left over to do is either let the country explode basically by not being able to pay its debts, or print more money. Like that's the only other option.
And print more money
sadly.
means more liquidity. More liquidity means Bitcoin go up.
Okay, so we have
exactly.
We have
Because it's
less
based in
loans.
currency.
Less
It's
loans
based
on
in
your
it's going to
currency.
blow up. So what's going to happen in middle of June when everything blows up? I think it's going to have to blow up first. Then McCarthy will lose his seat.
Oh, you really think they're going to do the debt ceiling thing and not pass it before in June? I mean, I know the U.S. has done that in the past, and they let it go 2 or 3 weeks, and they don't pay a few people, and then it all comes back, and they back pay
you got a House leader now whose whole power structure is predicated. He can lose. He can be voted out with one vote. They could say, "Hey, let's do a vote on you." So his primary goal is to stay in power. That's number one.
I'm with Mike on this. I think I think this is a different circumstance where basically like people have gotten crazy enough to be basically like, let's just see what happens. I think what'll happen is they default over like the weekend or something, and then like 5 Republicans come across and do that letter.
They have things working. They have some stuff working.
Yeah.
I can't remember the name of it. Things working in the House that you can force a vote on the floor without the speaker being the one to put it on the floor. And you also the 14th Amendment supposedly requires you to pay the debt, so you could put that into the court system.
And there's 2 games.
Find the one giant platinum coin too. So
right, they want to get reelected, but also everybody needs to keep making money. So you're not really going to crash the economy if you're heavily invested in the stock market and you own 7 businesses and you're getting tons of lobbyist money. That lobbyist money's got to come into those House members.
But the crazy Republicans are more excited just at the attention. I know. I think they're more excited about attention than they are anything else.
Yeah, a few people are,
So,
but at the core, money gets back to it, and they look at their bank accounts and their statements and go, "Well, we can't really wreck the dollar. That's what we're invested in."
Yeah, I mean, all of the people who back the Republican Party are big Republican donors who do not want their investments to be so it will stop. It's just how close we get to it. And so what does that cause? I actually don't think that'll be I think that'll be a mooning event. I think it'll like cause this like crash thing, and then they'll sign something and it'll be, oh, thank goodness, and then like it comes back, but then everyone realizes that it's still like we are kind of turning over now, right? Like all these latest data are starting to come down where it's like housing is nobody's buying houses, taking loans, all these things. And so when the credit crunch comes, it's fast, right? Like it's not like when Bear Stearns collapsed and then Lehman collapsed, it was just like, yeah, okay, this is like WAMU was like 6 months ago, and then and then bam. And that's a little bit what we're seeing now with these banks. It's like, look, we got it, we've covered it. what happens? I don't know. Something big happens, like one of these large commercial real estate agents says we have not even close enough money to roll over this debt. We're just going to allow, I don't know, 100 offices, buildings across the thing to go under, and these insurance companies now owe this money, and they don't have it, and they go down, and suddenly you have to rescue the too big to fail again. That can all happen really quickly, and so it's basically you're betting against time, and all I feel is it's coming sooner than later, and so time is nigh. So I'm looking to get out by the sell in May and early June type situation, and just see what happens.
Sell in
debt
May
ceilings first, obviously.
Sell in May and walk away, right? Like sell in May, walk away. To me, it's bullish.
That piece of advice is correlation. Like every time you look across the years, it's that's why it's a saying, right?
Because it's why? Because it's the narrative, sir. Like it's.
All right, Nick, why don't you finish us off here?
I'm just saying that it's bullish because, like, we all know that meme or phrase. It's actually wrongfully attributed to Gandhi, but it's the one where they first say ignore you, then. No, well, yeah, that's that too. True. A lot of stuff you didn't know about Gandhi, but no, it was the first they ignore you, then they laugh at you, then they fight you, then you win, right? So we know what comes next. Like we're clearly in the then they fight you stage.
We're not laughing.
We've been through the ignoring part. They laughed at it, and it's ramping up. So what happens after that? Then we win. So it's bullish. It's just going to take longer than we think. It'll happen, like David said. Like
I don't know. I'm still laughing. So
the other thing though is well where like we remember like China like totally banned Bitcoin, like America, like no offense America, but like if like China, that was a bigger deal than this is. Like America will not be able to really ban Bitcoin, whereas China was like no more Bitcoin.
Power.
So we're so bad.
All right, predictions for the week. Weren't we supposed to be at 32 again?
Oh, we're bleeding down. Are we at 28 still right now?
Oh, did you say it was going down, David?
Yeah, David
I thought it was going to forward 24, and I started to get right, and we went to 27 or 6 or something, and then it bounced back
22 at the very moment. It's down 1%, and the S&P is up 0.14. Hey, it is decoupled.
There you go. They're watching this podcast and listening.
15 minutes ago, I thought you were wrong.
All you had to do is short that 1 minute candle when you called it.
All you have to do is buy Pepe coin.
All right, so interest rates will probably tick up. Is the scuttlebutt in the next few hours that they're going to raise the rates. So what's that going to mean for Bitcoin next week? It's going to be up or down?
It's going to go up significantly. Like basically, everyone's waiting. The thing that happens that was going to happen, then everyone thinks this is going to be the pivot. That's very bullish for people's sentiment. We moon into June, and then all the reality starts to come. So yeah, next week we'd be in the late upper 30s.
Upper 30s next week. Okay, we haven't really gotten upper 30s yet, so we'll see.
Be happy if we're at 30 next week. Just
that's
hovering.
That's when I bought in 2 years ago, June. Around 30.
Yeah. Like,
and you've been earning interest in BlockFi the whole time.
Yeah. Oh, legal hell. Yes.
Have you heard about lending in NFTs?
I have now.
Yeah, I can hook you up with a guy who can get you 2 punks for your house. You can turn those 2 punks into a bunch of ETH and buy Pepe coin.
That'd be cool. I'd love to be homeless. There's a lot of homeless here I'd have friends with, unfortunately. All right, we'll see everybody next week.
Have a great week, guys.
Yes, yeah.
All right, say good.
Thank you.
What's this called? Big enough? Yeah. 5, 4, 3.